Got Gautam Shah joining us from Goldilocks Research. Gautam, good day to have you. 24,200 on the screen. Are you guys riding the rally, or are you asking your clients to keep taking profits wherever it's getting way beyond your expectations?
Good morning, Ajay. Well, I think that's the beauty of having some experience, having seen the 2003, 2007 bull market. And I think with what is happening currently, I think something similar happened in 2007, which was also a rally of disbelief. And the markets just carried on to a point where everybody just gave up and felt that, the market cannot fall. I think we are in some sense in that period, but I think domestic liquidity has really changed the game. The point that I keep making, and it's changed the way we look at technical analysis. Honestly, we've been riding the rally right from 5th of June because I think post the political mandate, it was very clear that the bulls will be back. Liquidity will keep pumping in and will keep taking this market higher. And look at the kind of leadership we've got in the last 20 days. IT is doing well. Reliance is past 3,000. Banks have made a good comeback with HDFC Bank going close to lifetime highs. So honestly, it's a sweet spot. It's a great place to be in. You don't need to overanalyze. You don't need to, do much in today's market. Just ride it, keeping support levels in mind. Now, as a technician, you will ask me, what are your levels? Honestly, the trajectory is more important than the magnitude. But I do believe that if somebody has a medium-term view, I think this market is readying for a level of 25,000 on the Nifty, a view that we did give a few weeks back. And I think that's where the market is headed. Global markets are quite solid. India VIX is relaxed, momentum, participation, small caps coming back yesterday. So I think it's a kind of an environment where one should participate, just stick to quality and have risk management in place.
Absolutely. And Gautam, to that point, quality as well has seen quite a bit of rotation, right? So let's start off with Nifty banks, because that's where, the cusp, or rather the needle started moving for the large caps at least. The Nifty bank, what levels do you foresee there? And then, of course, the individual movers as well. You talked about HDFC Bank. Is that where you see leadership as opposed to ICICI Bank, which has sort of shouldered the Nifty bank for quite some time now?
Well, since we follow the ratio charts very closely, a month back, we got a sense that the underperformance of HDFC Bank is coming to an end. And we caught it based on the ratio charts of HDFC divided by the Bank Nifty and by the Nifty. And thereafter, it's been a very classical move up, catch-up rally that you have seen. I think the stock has taken leadership and will continue to do well. And once the level of 1750 is taken out, I think the stock is headed for 2000 and possibly 2250. So that's our medium-term view on this particular stock. And if this stock does well, it will help the Bank Nifty, and obviously it will help the Nifty as well. But coming to the Bank Nifty, I think 6 months of underperformance. I think there's a lot of catch up to do. We like the top three banks, HDFC, ICICI, and SBI. And I think all these three top banks can propel the Bank Nifty towards a level of 60,000 over the medium term. Now, you might say that's quite far away, but honestly, in today's market, it's important to have some sort of a vision for the larger indices. So while there are smaller targets in the form of 53,500 and 55,800, I would say that investors should stay positioned for 60K.
For a moment, I want to go back to index components, the Nifty components. Reliance actually has lagged many of its larger peers, only woken up, say, last week or so, $200 move coming in. What are the targets looking like now? Tariff hikes have happened. There are a lot of triggers building into the company. Are they getting captured or readying for a move in Reliance on the charts?
Well, Ajay, since March 2020, sector rotation and segment rotation has been a part and parcel of this bull market. A couple of weeks back, people said, large caps are doing well, but mid caps and small caps are not doing well. A month back, people said mid caps and small caps are doing well, but large caps were not participating. So, honestly, you can read this market half glass empty as well. But being optimistic by nature, I think you have to be in pockets that are showing relative strength. And now with the comeback of Reliance and the fact that it took 6 months to clear that level of 3,000, I thought was a very important development, because with HDFC Bank and Reliance firing at the same time, you can't have a better market scenario. And I do believe from a near-term perspective, Reliance is headed towards 3,300, 3,350. And if you are taking a slightly medium-term view, I think 3,600 is intact. Another point which I keep discussing with a lot of my influential clients is that unless you see a bubble or a froth in the large caps, markets don't top out. And my experience of 20 years really taught me that. And I think we are nowhere close to a bubble. If you look at the valuations on the fact that some of these large caps have only started to do well recently, I think there is a lot more headroom for this market.
Right, Gautam, wanted to get in your perspective as well within the entire IT space, given the kind of move that we've already witnessed in the last month. Is there still opportunity to look at an upside potential within technology?
I think so. I think it went through a very bad phase of underperformance for 4 months where just about everybody complained about it. Now we've seen a good turnaround. This looks like a very solid turnaround, and it does seem as if it will take the IT index towards the previous high. So there is momentum and it could do well in the short term. But is it one of our preferred picks? The answer is no. I think I would still go with banks, pharma, FMCG, selective auto, NBFCs. Those are the spaces where I would rather want to, metals, not to forget metals, which remains an absolute favorite. I would rather go with all of those pockets than IT. I know it's done well, but I think there are too many issues globally and locally. And with this AI theme and how it's going to impact the industry in India and globally, I think nobody has so much clarity and they're all very richly valued. So while short term we are all okay with it, I think medium term there are better bets in the market.
Beyond Jio, of course, is housed under Reliance. But what are your thoughts on the way Bharti has come to 1500 odd? Even Vodafone, for the time being, did surprise and go to 19 mark. Any thoughts in these two?
See, you don't have too many, names to play telecom. I think Bharti has been a brilliant structural story for us for the last couple of years. It's been a part of our long-term picks all along. And honestly, if you just put a simple moving average and plot this chart, you will realize that you never got an exit in the last 1.5 years. It's been that easy because it just consistently made higher highs. And even now, I would say that it's not very richly valued because in some sense, the kind of market share this company has, I think it can do bigger things going forward. So it's a definite hold in your long-term portfolio. On the other hand, Vodafone is more like a speculative name. Honestly, I would like to stay away from it. There is a lot of talk and chatter around it. If it does clear the level of 18.5, 19, you could see a bit of a rally. But at today's market, at a 24,000 index, I'm more looking at top quality stocks than going to grade B and grade C.
In fact, I would, you at least called it out as you actually see it. Good clarity, I must say. Gautam, what would you like to get into in pharma? What are you riding there?
Well, Pharma has been a brilliant story for the last 1 year. I mean, for the last 4 months, it's actually got into a consolidation patch. Now it saw a breakout last week. And I think we like stocks like Dr. Reddy's, which could be setting up for a possibly a 1,000 rupee rally from here. Sun Pharma has been a structural story for a couple of years now. Cipla has been doing well. I think stocks like Divi's Lab and Laurus Lab have completed their underperformance, so they are also likely to move up. So this entire pack, I think, has a lot more upside, and we've seen what Wockhardt Pharma and Zydus Life have done in the recent past. And these are in some sense low beta or negative beta. So even if the markets go through a bit of a correction, I think pharma and FMCG will stand out. So almost 14 to 15% of your portfolio at this point of time should be in pharma.
That's quite interesting. Tell me, what is it that you foresee, Gautam, on the charts of the oil and gas plays? Because, ONGC, MGL, IGL, one is seeing quite a bit of traction and sporadic moves in this entire space.
See, there are three things here. Fundamentally, they're not very expensive. Number two, they have been underperformers for a decade now. So they're coming out of a decade of underperformance. And if they have only done well in the last 1 year, smart money action has been quite solid in these stocks. And there are sector tailwinds as well. So keeping all of these factors in mind, I would remain bullish on all of these stocks. I think ONGC has the potential to do bigger things, maybe a 30% rally even from here. IGL can easily see a 30-35% rally from here. So, oil and gas as a space we like. But if you talk about PSU as a basket, I think the time has come to be very selective. So I like the power PSUs, but I'm not a big fan of the defense and the railway PSUs anymore. And we've seen this post June 4th, that PSU as a basket hasn't been moving with the market on a daily basis. I think that's a very important takeaway for your viewers.
Interesting you say that because there has been a lot of conjecture in the market in any case about railways and defense and whether they've run up ahead of the fundamentals also or not. But within PSUs, while you're saying that the weakest link is defense and railways, what's looking strong and what within that, the power space that is, do you see investable opportunities still?
Well, I still feel that if you have to play the India story, stocks like NMDC, NTPC, Power Grid are stocks and stories and narratives which I think will do very well over the next 6 to 12 months. Not to ignore the metal PSUs like SAIL and NALCO. I think wonderful chart structures. They've all come after making a base over the last 18 to 19 months. So I think a parabolic rally is actually due in some of these stocks. So I would rather go with these than a typical HAL, a BEL, or a BEML, which I think in some sense have run their course and they are pretty much in a bonus period. Now, this could last for some more time because the market momentum is strong. But with the power grids and the NTPCs of the world, I don't think you can go wrong from a longer term standpoint.
As far as PSU banks are concerned, do you find comfort in some of the large cap PSU banks?
Absolutely, Ajay. I think SBI has been the trade for us this last 6 months, and we've said this many times across all channels that it could be one of the best performing stocks in the Nifty. It's taken a bit of a breather in the last 2 weeks at levels of 850. I think once this area is cleared, I think SBI is good for 1,000 and possibly even 1,200. So I'm talking of a 30 to 40% move on SBI even at these prices. So I think it's a very mature kind of an uptrend that you're seeing in SBI. On the other hand, will I go with the smaller PSU banks? The answer is no. I think they're all speculative. They're all based on narratives, and any market correction, I think they will be impacted. So if at all you want to be in PSU banks, stick to SBI and Canara Bank.
Right. When you say NBFCs, which are the kind of names which you like, the larger NBFCs, or are you okay getting into some mid-cap, high-growth NBFCs as well?
See, NBFC as a pocket did nothing for the last 6 months, and I think the turnaround is happening, and we are seeing it on the charts. Last week, I had the pleasure of listening to Rajiv Jain at the Flame University for over 3 hours, and I was completely floored by what he said. And given the fact that the stock is coming out of 3 years of underperformance, I think the time has come for Bajaj Finance to actually go back to lifetime highs. So we don't look at stocks on a day-to-day basis, but if you have to take a 6 to 12-month view, I think a 8,000 on a Bajaj Finance or even a 10,000 at some point of time over the next 12 months is quite possible. Chola Finance is another stock that we like, and I think it could do well. L&T Finance and M&M Finance have also did very well. And since my view on gold and silver is very positive structurally, I think Muthoot and Manappuram will also do well. So NBFC as a space is coming back. The risk reward is good. In the last 3 years, earnings have picked up. Ps have gone down and the stock price is where it is. So I think it's a beautiful place to be in for NBFCs.
Interesting. What about, autos though, Gautam? Because, pretty much every stock is sitting at an all-time high. The monthly sales data this time is a little bit wobbly, so I don't know how sustainable this rally is. But, we've seen autos be in a leadership and bull position for quite a few months now.
I think it's overdone, Aisha. I think it's a good time to take some profits in auto. I think earnings of the next 3 years is in the price today, is what I believe and what my analyst tells me. So I don't think we are going to ride the auto run anymore, at least on the large caps front. But I do believe that auto ancillary, these component makers for EV cars and the likely entry of Tesla into the country, that could be a sort of a game changer. So over the last 2 weeks, we at Goldilocks have concentrated entirely on the auto ancillary space. The Gabriels of the world, the Suprajit Engineers of the world. I think they've all, Minda, I think they've all done very well. And I think this could be a structural trend for the next 2 to 3 years. So auto ancillary is a space to be in if you're taking profits in auto large caps.
Also touch upon the fact that pharma and FMCG will stand out even if the market underperforms. You shared with us some pharma stocks. What about FMCG? Which names or stocks would you look at?
See, FMCG in today's market is not momentum. Everybody seems to be chasing momentum and mid caps and small caps obviously are flying around. But if you're looking at some stability in your portfolio, if you're looking at a Rahul Dravid in your portfolio, I wouldn't mind a ITC and an HUL. I think both are excellent stocks, both are excellent setups. Maybe the downside is about 5 to 7%, and your upside could be anywhere between 20 to 40%. ITC, I think, has been consolidating. Once it gets past 440, you'll see a larger move. And I think HUL is readying for a move back to lifetime highs. Let me also add United Spirits, Jubilant Foods, and Godrej Consumer. These are the three stocks that we like from a medium-term standpoint.
Thanks so much, Gautam. It's been interesting chatting with you, getting all of those sector and stock recommendations and your outlook at Goldilocks on the markets.
If you like this video, then like, share and subscribe to ET Now.